Agro space now. The sugar prices have hit a contract low, weighed by higher selling from mills which are looking to raise cash to pay farmers for the gain amid lackluster consumer demand. The cold wave-like situations in the North India are good for sugar production, and India is heading for surplus output this year as well. There you have the reaction on prices below 3,200 for sugar today. The soy oil prices reversed early gains from the highest level in more than 3 weeks, in the line with overnight leads from the overseas markets and declining demand for soy meal as well. In pulses, the chana prices declined on fresh supplies from parts of southern India, expectations of better output and likelihood of higher imports due to low stocks and a drop in kharif output as well. In spices, then you had the jeera prices hitting a contract low for a second straight day, on weighed by weak demand in the spot markets, higher area under cultivation and favourable weather conditions. There was decline in turmeric futures as well, as traders chose to sell their produce due to mounting stocks and sluggish exports. The pepper prices in the meanwhile gained on firm cues from the spot markets where winter demand was good, though an estimated rise in output and weak exports will keep the upside quite limited. Let's get in then. Jean-Yves Shao, Senior Industry Analyst, Northeast Asia at Rabobank, who joins us on the show from Hong Kong. Jean, hi, welcome to the show. Let's talk about what happened in the previous year first. The cotton and the sugar were the underperformers in 2012. Do you see the prices turning around in 2013?
I think cotton and sugar will stay underperforming. If you look at cotton, the situation is still at the unplus harvest, liar stock, so the number should be about 65, 70 cents per pound, and we don't see a lot of upside. Sugar, we're probably going to a second year of positive surplus. So what it means for the positive surplus, we will have a price increasing slightly, but we're still around on the 18, 19 cents per pound.
Sheen, what's your sense for edible oil, palm oil prices, which have seen policy changes in the producer countries? Do you see the supply and the price impact of the same in the near term?
The policy is mainly from Malaysia and Indonesia to cutting the tax to support the productions. What we see is Indonesia is following the new policy of Malaysia to cut tax. So what we mean, it would boost a bit of productions, but overall price will probably not have a major change. The most drivers is how the demand is from emerging demanding, especially from China. So given the situations, is also looking how the soy price, one of the key replacement that we have, how we will behave. Normally we see palm oil still having interesting price differentials, making him in a good position. So it's probably one of the best positions this year to have a slight increase compared to other commodities.
Sure, let's talk about the pulses as well, and there are concerns on supplies extended into 2013. To your price view on that for 2013 now?
If you look at the overall agri-commodity, we see a decline overall of 10%. The reason is rebounding of supply, especially from the US, but we see good harvest from South America. So all in all, if you look at the grain and oilseed markets, definitely price will go down. And as we say, the soft commodity, we don't see a lot of upside. So overall price will be pretty stable. So all in all, minus 10% of agri-commodity will be reasonable. Overall, one risk we will always see is volatility. So the pulse coming from the supply can move some volatility risk higher this year.
Final question then, Jean, what would your best pick be for investment or returns in food in 2013?
We believe agri-commodity will be underperforming. We say minus 10% overall. The one outperforming in the agri-commodity will definitely be palm oil. We expect palm oil having a better upside. The spread compared to replacement of soy oil is more interesting, giving more room to increase. So we see an increasing of palm oil overall this year.
Jean, thank you so much for joining us. So that's the view coming in from Rabobank. Underperformance can be expected in the global markets from agro foods in 2013. Vijay, what's your sense on everything that Rabobank has said today? How much would you agree on that? And the only thing that they see some potential of rising, of course, has been the edible oil space.
Manisha, that was more of a global view. I think India presents a very unique case here. First of all, we are housing 17% of the global population spread across 2.5% of global land mass. And our arable area is shrinking. We are likely to pass the food security bill in the budget session this year around. We are also looking at diesel price hikes. We are looking at electricity hikes. We are looking at CNG hikes, which are likely to raise agri prices higher. We are raising MSPs and FRPs of most agricultural commodities. In the Indian context, I would be very surprised if the agri commodities did not outperform the industrial commodities like they did in 2012. I would be very surprised if they didn't repeat that performance in 2013. I would buy the declines.